We were just talking about gold around $1,300, so Mark Lackey is in here. He's Executive VP CHF Capital Markets, and you and I don't agree on gold prices.
No, we don't, Pat, although you're not in the extremely bearish camp, and I'm not in the extremely bullish camp. You know, when I was here last time, I said we'd probably average around 1,300 through the summer, 1,280 to 1,300, because it's seasonally weak, and that's exactly where we are. The difference is you've got a forecast now of there's people as low as 800 at the end of this year and people as high as 2,000. And I went back, I couldn't find a variance of that percentage since the late 70s. Yeah. So it's really got your extremely bullish and extremely bearish people out there. I'm mildly bullish. I'm sitting at 1,400 the end of the year and then 1,500 at the end of next year. So I'm not up at 2,000 like some people in a very short time period, but I am modestly bullish, and for a number of reasons. And I think on the demand side, Pat, I see some improvement this summer when you get into the Indian marriage season. You always get at least a bump up in gold demand, and the Indian government's been pulling back on that import tariff. So I really think that's going to be one of the reasons. And the Chinese have been really buying a lot of gold jewelry this year, which partly probably because the price is lower. But that's the way the markets do operate.
Yeah.
So I think I'm getting some demand here from areas that are stronger than what people had thought. And we're not getting as much selling from the funds anymore either. So I think the $800 case is unlikely. And I know that, Pat, a lot of guys like yourself could see maybe 1,100 or something in that neighborhood. But I'm going to say that I do disagree also because on the supply side, we're seeing projects now being delayed. And CapEx is really being cut by the big guys. So I'm not convinced we're going to see some of the gold supply in the next year or two that we thought we were going to see as a consequence of the fact that we have had a reaction to the gold price here, Pat. And the guys are telling me that gold is infinitely inelastic, the supply. That's just not true. You will get people shutting down some gold properties and actually delaying operations.
Yeah, and you talked about India last time you were in too on the demand side of the equation, and Indonesia, I think, on the supply side, adding into things. So against that forecast, how do you play gold? Is it better to play the underlying commodity where you might get a 10% bump, or some of these stocks?
No, I think, Pat, there's about 500 venture-related gold companies, so it gives me a lot of opportunity to follow maybe 10 or 15 and then pick 3 people I really like. And I do it basically, Pat, on the basis of the jurisdiction, management, and projects.
Okay, so Auriga?
Yeah, that's right, Auriga Gold, which, Pat, again, this one's surfaced to me in the last few months because management change. They brought in some top people, and what they've now accomplished is that they've turned around the balance sheet, they've got money, and the other thing that Gordon's done, he's gone on and he's brought in a new technology. There's a lot of good gold mining operations between Manitoba, Northern Ontario, and Northern Quebec, but it's narrow-veined, high-grade. And there's been new technologies developed that not everybody's really decided to try for various reasons, but they're out there. And he's going to go forward, and I think he's going to get a much better yield and a much better production out of his mine than he would have if he had stayed with the old traditional factors.
It's kind of like what we did in North. What's the technology?
Well, basically what they're going to do, Pat, is just the angles they mine the gold, the way they put the rail cars in. It's relatively simple, and you may say, well, why weren't people doing this in the past? Well, why did people always drill vertically in oil and not horizontal when the oil is horizontal? I mean, those simple questions are there. So, the way it is in a lot of mining, hey, if it's not broken, don't fix it. But I think these guys recognize, Gord Glenn and his people, that if we go and take these new technologies that are proven, it's almost like a new paradigm to some degree. And I think this is going to be great for Northern Ontario, Northern Quebec, and Northern Manitoba, because this technology that's come out of Val-d'Or, Quebec, will actually lower costs significantly.
Okay, so is he taking old properties and reworking them with the new technology?
Effectively, yeah. He's got a property that's been there for a while. I mean, there's been a fair amount of gold actually come out of Manitoba, Northern Manitoba, and he has a property, and he's got the infrastructure, and he's got a mill. I mean, if you had to buy that mill today, I don't know, that'd cost you, what, 20, 30 million, I would guess. So he's got the infrastructure, and of course, unlike some provinces, he's got very low electricity costs. So, I think it's a very good operation, and that's one of the reasons why it's now one of my top picks.
Phoenix Gold.
Yeah, well, now Phoenix is being run by Glenn Lang. Now, Phoenix, some people may say, I don't know that story. Well, that's because it's a very new listing. And what Glenn had, he's sitting on property right beside Newmont in Nevada. And I like this because he's going to do all his drilling starting now, over the next year, and try to prove up a resource. I think he might get as much as 1 million to 1.5 million ounces. and a billion pounds of copper. So it's going to be a significant gold and copper play. But what I find interesting is he's basically encompassed by Newmont. So Newmont's there saying, fine, let those guys do all the drilling. We don't do as much of that now. And if he gets a really good resource, which we anticipate, the exit strategy is going to be obvious. He's going to sell to Newmont. Probably, maybe it might take a couple years, but that's what I see happening here.
Okay. And the last one is Premier Gold.
Well, Premier, I go back with Ewan Downey, who runs Premier Gold, when he ran Wolfton, and that was a huge win. It was taken over, as you know, by the Chinese. It was a base metals play. And now he's come along and put together a great project, or 3 great projects. He's in Nevada, he's in Red Lake, and he's in Geraldton. Any one of these, Pat, would be a company maker, and he's got 3 of them. So I did mention this a while back at $1.50. It's now $2. I wouldn't worry about the fact it's had a decent run, because again, I do think gold prices are going somewhat higher. But nevertheless, this has got to be another good takeover candidate. Because if I was a mid-cap and wanted to get bigger in those 2 environments, Ontario and Nevada, I've got something that's been, I think, he's got some exceptional properties. His resources are growing. And I think it's just a matter of time before somebody takes a run at this stock. I do think that the longer the better for him, in the sense that he'd like to see, obviously, more appreciation of this price before anybody does take a run at it.
Okay, Mark, we'll watch for all those things.
Great, Pat.
Great to have you here.
It's great to be here.
Mark Lackey, Executive VP of CHF Capital Markets.